It's about that time of day again. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Thursday evening, July 23rd, 2015, wrapping up a fantastic week with the Thursday edition of our nightly newsletter. Last one of the week. We don't do these on Fridays, so we're going to get ready here for our tremendous opportunities. Lots of strong trends right now, and boy, oh boy, do I have a jam-packed newsletter in store for you guys. Hope you had a great week with us this week. We've had an incredible week here. If this is summertime trading, I'll take it all year long. All right, before we jump into our newsletter charts for tonight, I do want to remind you, I teach all of this information to all of our students here at schooloftrade.com. Head over to schooloftrade.com. Everything you see me covering tonight's video, I teach in our beginner, intermediate, and advanced levels of membership. Check it out. There's a great free trial on our website. Also, I want to make sure to encourage you to watch this video right now on our trading blog here at sidewaysmarkets.com. There are 3 reasons why you should be watching this video on our blog. 1, you can download all the charts right below the video here this evening. If you're watching this video on our YouTube page, there's a link right in the description. That'll take you right over to our blog page, and you can download all the charts you're going to see me using tonight right below the video. Second thing, upper left-hand corner, if you're not a member here of schooloftrade.com and you want to get a free pass, come out and test drive our live trade room, I would love to shoot you a free pass. Become a member for a day, tomorrow, next week, grab your free pass, upper left-hand corner. And, of course, you know how we roll here. Got my nightly newsletter mailing list, lower left-hand corner, right above my ugly mug, pardon that. All you need is your name and your email address, and I'll send you an email every single evening when that newsletter is ready to go. So, once again, 3 things. Make sure you download today's charts, grab your free pass, come out and see me as a guest in the trade room, and, of course, last but not least, name and email address to register for our newsletter mailing list. Guys, if you grab the free pass or you register for the newsletter mailing list, I'm going to send you a verification email, so make sure you check your inbox. Let's get started. Wrapping up the week here, wrapping up a very good week of trading in our trade room. A very, a lot of learning and earning opportunities here this week. What a great example here of a strong, what we called last night, a heavy market. You actually got a pretty good buying opportunity off of that support, but the easy money was made here, and we're here to make the easy money. There was a sell zone overhead here from last night's newsletter, and this thing just went right up, buyer failure into the high, and bam, right back down. So again, gold looking very, very bearish. Sorry about that. This is the gold chart here, the GC contract. We got one more week left on this 8.15 contract for the GC, and then at the end of this month, we're going to roll forward to the 12.15. We're going to skip the 10.15. I'll talk more about that when we get there. So we've got plenty of time here on the 8.15 contract in gold. We're clearly bearish right now, which means sellers are looking for opportunities at resistance levels. That should say resistance levels above. Sorry about that. There we go. Get that fixed there. So sellers, you guys are looking for opportunities to sell at these resistance areas. Meanwhile, buyers, you really got to be careful right now because this, like I said last night, is a heavy, heavy market. It feels like there is a brick tied around, or a cinder block, right, tied around this market right now, and it just keeps on sinking every time it tries to go up. Every time it tries to go up, every time it tries to go up, it ends up giving us some great opportunities to sell. Really, the only way you can be a buyer right now here on gold, at least in my opinion, is exactly what you saw earlier on today in today's session, which is where we see the price test the support level, and then you really, in my opinion, the safest way to do it, because remember, if you're going to be a buyer right now, you're buying against a very significant trend. The best way to be a buyer right now is to look for sellers to try twice and fail. We'll be trading this in real time with us tomorrow. So, of course, come in and join us, and we'll watch together, and we'll show you what we're talking about when it comes to sellers failing here. So, 2 scenarios here right now. We go higher. I'm looking to sell at resistance. We go lower. I'm looking for sellers to try twice and fail to buy those lows. Again, if I had to choose what direction, it would be selling here right now because of this very heavy market. If you're looking to get short here, though, you got some targets waiting for you below, just a plethora of measured moves, A, B, C, D, A, B, C, D. So as you can see, plenty of support areas. That just goes right along with why it's so challenging to be to be a seller at the lows. Wait for price to get up off those lows, and then, of course, really what you're looking for is to sell at resistance. If you don't want to wait for price to get up to resistance, just wait for the pullbacks to fail, and that'll give you another shot here. Bottom line is, sellers, you guys are selling at resistance or short-term buyer failure at interim support, right? Again, as this price goes higher here, if you don't want to wait to get up to support, look for the pullback to fail and sell into it. Stay to the short side here on the gold right now. That's the best plan for you here. That's where the easiest money's going to be. And if you want to be a buyer on gold, wait for it to be oversold and then seller failure to buy up off those lows. Moving on here from the yellow gold, right, to the black gold. Moving to crude oil futures. We already did rollover on crude oil, so we're on the 9:15 contract on crude. That was earlier on this week. It was Monday actually. Crude oil is bearish and trading down to the lows of the long-term bear channel. Sellers are looking for opportunities at resistance levels above, shocker, and buyers need to be patient for times when the sellers fail at support levels as this price becomes oversold. So, boy, I'll tell you, it's going to sound like a broken record here on crude. Almost the identical scenario here we're seeing on gold, a very heavy market. Every time price goes up, we're looking for buyers to try and fail, to sell it back down. Every time price goes up, we're using resistance areas to sell it back down. So ultimately, the process is the same for crude as it is for gold right now, or any strong trending market, right? We have a big move down. I've got these resistance areas overhead, and this is obviously going to be the easy stuff, right? Waiting for price to sell off. Well, another way to do it is to wait for the buyers to try to buy this area, and then once they fail, and again, usually they try twice, then of course you can sell into their failure. Another way to do it is as we're pushing higher, right? As we're pushing higher, you're finding these short-term support areas, and you're using those because you know what's going to happen. There are going to be buyers that will try to buy those support levels, and that's another opportunity for you to use interim support to sell into the buyer failure. Does that make sense, right? So a couple options here. You can stay very patient right now and wait for price to get up and then wait for the turn, right? And then sell those waves on the way down. Or you can look for buyers to, right, try a couple times there, sell right into their stop losses for a buyer failure at support. Or the third option would be a little bit more aggressive. Rather than waiting for price to go all the way back into that resistance, wait for a short-term support level, buyers try and fail, and just basically sell right into those stop losses as that price pulls back and fails at that time. Obviously, that third scenario, that's going to be your most aggressive opportunity. What if you want to be a buyer right now? The best way to be a buyer right now is pretty clear here. You're going to want to see this price get down to key levels of support. Let them dig into that support a little bit. Again, try twice, and then buy right into those stop losses. That's really what you got to be looking for if you want to be a buyer right now. You've got to and again, I'm talking about the easy money buying, the consistently profitable opportunities. Wait for the opportunity where the buyers are going to be entering at support and where sellers will be taking profit at support, right? So wait for it to really dig into those support levels. Wait for the sellers to try twice and fail, and that's always going to be your only real opportunity here to be a buyer, at least for the consistent opportunities. Buying on the way back up is always a little bit of a challenge because you're swimming against a stream. So you never know which one of those little pullbacks are going to fail and we collapse right back down. So right now on the crude, exactly the same thing we're doing for gold. We're bearish, we're feeling very, very heavy, and ideally we're looking for price to sell at these major resistance areas overhead. To get short at those resistance areas overhead, I'm looking for reversal patterns, I'm looking for buyer failures, or I'm looking for price to roll over, right, and then I'll sell those rips on the way down. If you want to be a buyer right now, wait for it to dig into that support. Sellers try a few times, and then you're buying right into those stop losses. Again, if somebody put a gun to my head and said, what direction are you going to trade in today, Joe? I would say, well, first of all, is there a need for the gun, right? But I'd be a seller, right? Obviously, we get a bearish trend here. And right now, the easiest money on crude and gold is to wait for this price to get up here, wait for the buyers to try a couple times, I think they try twice most often. Members, you know what I'm talking about, and then sell right into those stop losses. Stay patient on this one for you sellers because you can see we have a bit of an overshoot. Here's what I'm seeing right now. There's two channels in this chart you really want to be aware of. First of all, you have the long-term channel. And so we have kind of this ultimate goal of getting down to that channel low, right? That's what's going to happen. We're going to rotate down. We go from high down to low, back to high. You can see they got a little perky up here, but they're going to rotate down to those lows now. And so eventually, that's the key word here, eventually we'll find our way down to those lows. The problem is going to be, when are we going to get there? So as we're going lower on a mission down to those major channel lows, you'll notice the more medium-term channel. I wouldn't call this a micro channel. I call it a minor channel. And of course, you can see here we're rotating here, rotating down, high, or low to high, back down to low. And you'll notice that's a little bit of an overshoot right there. No surprise. I mean, you saw the thing fall out of bed today. So we get the overshoot of the low. We should expect to, just like the S&P, overdo it on one side, overdo it on another side, and then possibly making that next push down, testing 50 maybe tomorrow. You know, we'll have to see where it ends up. But right now we know that little overshoot right there tells us I won't be surprised at all if this thing jumps here overnight and gets us up into these areas overhead where we'll look for buyers to fail and then sell it right back down. And you've got some targets, in my opinion, we really haven't hit. We got $48.19, we got $48 a barrel, we got this channel low down here. And if you really want to get crazy, there's this major range low right down around 47. So 47 is that major range low. I mean, we're talking about crude oil here, so it really could keep going for a good run tomorrow as well. We'll have to wait and see, but that's where you've got some major support waiting for you to the downside here on crude. Yeah, 47.05, 47.03 is going to be an easy area of support as well. It's going to really have to tumble though to get through that channel low. So I'll be taking my profit off at that channel low. I think we got a good plan here for crude and gold, right? If you're going to be a buyer, wait for it to get oversold. Sellers try twice to buy off those lows. Again, you're aggressive being a buyer right now. Sellers, best bet is to wait patiently for price to overcorrect back to that medium-term channel high, find those resistance areas, and sell, either with buyer failure, reversal patterns, or wave pattern short after the turn. Guys, we'll be trading this market in real time tomorrow morning in our trade room. Don't forget, you're never alone out there. And then, well, Mr. S&P, the Mr. S&P. Great to see that we're doing exactly what we had projected on Monday evening this week. We talked about this big run up. Now, this is a great example of what we call a channel overshoot and an overcorrection. It also is a bull flag, as you can see here. So two really important clues on this, and I know. We've been talking about this since Monday, right? This is nothing new. We have this bull channel, right? And remember this little thing here, right? Remember last week how it just kept on going, and they were blaming it on grease, and they were blaming it on a fat finger, and there was all kinds of rumors flying about why. We knew nothing more. It's just a range high over here. That's all it is, right? It's no big deal. So we know we're pushing higher, and we have this overshoot. So, of course, this overshoot of that channel high, what does that tell me? If you've watched my newsletter in the past, you're saying the poker table. Absolutely. Whenever I see an overshoot of a bull channel, that means I close my eyes and I think of that poker game where the bulls have all their chips in the middle. In other words, when we see an overshoot of that channel high, what does it tell me? The buyers are fully committed. Now, how do you get more buyers involved? You've either got to get something else that comes out that really shakes this market up to get other time frame traders involved. Because think about it. The minute traders, the hourly traders, maybe the 3 or 4 hour traders, right? The kind of the medium-term time frame traders, they're the ones that ran this thing up like this. If you're going to get this to keep going higher, you need to get in the longer-term time frame, the daily chart traders, the weekly chart traders, the swing traders, and that's very rare. So how do we get the price to go back up again? Well, the buyers who push this price higher have to take their profit and then put it back to work again. Or price has to pull back off these highs to attract a bull. as we always joke around by saying, how do you attract a bull? The color red. You've got to get some red candles. You've got to get the price to come off those highs. So lower prices are expected after the overshoot. The only way to get this price to go back higher is we need to shake things up again, which hasn't happened this week. There's been no news in the schedule. Or the buyers who push this price have to take their profit. That'll result in price coming down. And price has to move lower to attract more buyers, right? It's called supply and demand, right? We talked about that back in Economics 101, back when we were in grade school. So we know that overshoot says expect a deeper correction. And this was just classic this week, right? Buyers try and fail. Buyers try and fail. Buyers try. Can you guess what I'm going to say next? Yeah, that's the next expected move here on the S&P. We also have this flag going on right now. I don't want to forget about the flag. This strong spike up. That strong spike up is resulting in a lazy. Now, you've heard me say this before, and this is a great application of what you've heard me say. You know, I'm a big Seinfeld fan. This reminds me of the Summer of George, right? Well, this has been the Summer of Flags. This really has, right? Serenity now. Well, so here we have our spike up, right? That spike up results in the buyers are fully committed. Then we have the Summer of George, right? We have this bull flag, right? Now this flag is a lazy flag, and it's almost misleadingly lazy. Now why is it so lazy? Because again, the buyers have all their chips at work right now. The only way we can get more buyers involved here is what? Shake things up with more news or something else that has to come out and shake things up. Or we got to get lower prices and the buyers take profit. So what we end up seeing is we end up getting a deeper pullback. We end up getting this lazy channel pulling back. And usually what happens is, not always, but usually you're going to get this almost in your face move that makes everybody start drinking the bear Kool-Aid before it goes, see you suckers, and it takes right back off to the upside, right? Because the same buyers that push this higher, they're drooling over this. Now they can get back in again at a discounted price. And that's the reason why these flags can be challenging for a new trader, because that lazy channel makes you think, maybe they changed their opinion of value here. And then you see that spike down, that sharp move down. And that sharp move down usually fools a lot of people. And what ends up happening is you get this, where you get the moving average coming back down, and we usually get some sellers that get trapped in here, and that's where you want to be buying, right there. Right where those sellers fail, right there. That's your best bet. Because you know they're going to be buyers buying it. Just got to wait for those sellers to take the bait. All right, so that's the high probability environment here on the S&P right now. Will we get it? Just like you, I got to come in tomorrow and see what we get tomorrow too. But that's the plan. Okay, that's the plan. So the overshoot of the channel high tells me expect the overshoot of the opposite side. Now, if you're a member of mine, if you're a student here at School of Trade, you know that this overshoot of the opposite side is a dynamic overshoot. It's a moving target. Okay, if you don't know what I'm talking about, go into your intermediate course and check out the chapter on channels, and we talk all about it in our intermediate course here at School of Trade. But bottom line is, the timing of this is what's going to be the variable for tomorrow. We'll be trading this market live in real time tomorrow morning on Trader as well. So what can we expect here? Well, what if price goes higher? What if price goes lower? Right? What if price goes sideways? If price goes sideways here right now, I'd be looking for that fake break at that low, and then that being your best buying opportunity. Again, you're usually going to get one last oomph by those sellers, just enough to get the sellers thinking that they've got control now before they fail and price goes back up to the highs. What if price goes higher? If price goes higher, I'm looking for, just as we did here yesterday, the exact same thing I said last night. If you go back and watch last night's newsletter, or just watch till the end of this video and it will just replay in the next one. But we said the exact same thing last night. Remember what I said last night? I said wait for the buyers to try and then sell into their failure. That's exactly what happened. Same thing here again. We go lower, we come up, wait for the buyers to try, and if they fail, there's no guarantee they're going to fail, but if they do, be ready to sell it, back down in, because now don't forget about the flag, right? The flag is still there, which means the channel is still in play, which means we're definitely looking for those buyers are going to be all over this thing if we get one more push down, because now we're going to engage all the longer term traders. I've got measured move support. I've got trigger zone support, extension support. So again, what you really want to look for is that next leg down, and that's where you want to be looking for those sellers to fail and start buying that failure. Jessica said in that little illustration that I drew earlier about the flag. Remember Summer of George, right? Remember that one? Okay. So next up, if we go higher here, and if we don't fail, right? If we don't get that failure, now you buyers are going to have a small opportunity. It's not going to be much, though. It shouldn't be very much to get up to that 13, right? That 13.0, 9 to 13 area here. But again, I'm really expecting this price to come back down and then getting the next opportunity. So I'm looking for buyer failure at resistance, and then saving my bullets to be a buyer here once we kind of fake out those buyers, bring it back down, and then right back up again. I'll be waiting to see what this thing plays out with tomorrow. It's a summertime Friday, so get to it early. Get to it early and get out of it early tomorrow. We'll be watching this baby live in real time tomorrow morning in our trade room. Last but not least, boy, this euro is looking nasty. We definitely got it right last night on the newsletter, but as you can see, though, we still haven't hit that measured move from last night's newsletter. It looks like we have, but really the measured move's at 1039. So just like we talked about last night, we got that push back into the range. We've got price rotating off of these lows right now up towards those highs, and then that's when you're going to get the best selling opportunities going back above. So right now, really what you got to do right now in the euro is keep using these resistance areas for seller failure and to buy into that seller failure. So as we're going higher here, no guarantees obviously, but I think it's going to be almost impossible to avoid testing that 1039 at some point tomorrow morning. So definitely looking here for, as we go higher, again, we expect this market to rotate down to that low, rotate up to that high. The challenge is going to be you're in a bearish downtrend. So how do you buy in a bearish downtrend? Very carefully, grasshopper, right? Well, what you do is you wait for seller failure, right? You know we're going to try to rotate up to these highs, and that's where I'm going to start looking for sellers to come in, and that's where we'll clear out all this resistance, and then we'll have some nice, easy selling opportunities. Right now in the euro, I'm looking at all of these resistance areas overhead. You can see them. I put a bunch of them on here for us. You're waiting for price to go up, test, fail, up, test, fail, up, test, fail, and you're literally looking as a buyer here right now in this bearish market. You're looking for opportunities to buy when sellers fail at resistance. The best thing here would be if we go lower. Going lower here, that's where you're going to get the easier opportunity here, buying those pullbacks. And then if they fail, that's your signal now to sell back down to those lows. So once again, as price goes higher, I'm looking to buy, but only after I get sellers trying at resistance and failing. What if price goes lower? Buying opportunities as we rotate back towards these highs. If it fails, that's your cue now to get on the sell side, and we're running back to those lows. Now you know the plan here. I'm pretty sure we have another vote coming out of Greece here at some point too. Seems like that last election kind of slipped right under the radar of everybody, so we'll be paying attention to that tomorrow, trying to find some more headlines for you guys on the euro. I think we got our plan of attack here right now. Sell every opportunity on crude right now. Stay patient on the S&P, right? The summer of George, right? Stay patient. If you haven't seen that Seinfeld episode, I'm sure it's somewhere on YouTube. I'm sure if you just Google search the summer of George, you'll have a good laugh right along with me here. And if you haven't seen the episode, that's definitely some good culture for you. Definitely some good culture for you. Gold is very bearish right now. Be looking for selling opportunities on gold. And again, euro, as euro rotates back towards these highs, again, looking for seller failure and buying opportunities at support and resistance. Guys and gals, I hope you've had a great time with me here this week in our nightly newsletter. Don't forget, Monday through Thursday evening at 8 p.m. Eastern Time. That means this is my last one for the week. Next newsletter will be next Monday evening at 8 p.m. Eastern Time. Also, Monday through Friday, 8 a.m. Eastern Time. We open up our live trade room. That's right. Come out and join us. I get a free pass for you as part of our free trial. We have 3 levels of membership here at School of Trade. We got lifetime memberships. Everything's included. We are the longest running, most explosively growing community of traders on the interwebs. You're going to learn more with me in 1 week of my free trial than anywhere else you go on the web. I'll tell you that much. I've got someone standing by here 24/7, 365 to answer all your questions. Guys, don't be a stranger. I'd love to hear from you. My name is Joseph. Email address is jj@schooloftrade.com. Post me a comment. Send me an email. I love your feedback, how I can continue to make this newsletter the very best place to learn and earn every evening on our trading blog. Thanks for being here. Have a great summertime weekend. Don't forget to stay hydrated, wear the sunblock, and geez, watch out for those sharks. Boy, I mean, is there an abundance of sharks this year or something? Jeez Louise, boy, scary stuff. Stay safe out there this weekend. Be nice to each other, and I'll see you guys here on Monday for our next newsletter. Adios, amigos. Bye-bye for now.